Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 17th, 2025, and we're diving into the first quarter earnings report of Cohen Steers, a leading global investment manager specializing in real assets and alternative income. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Cohen Steers has just released their Q1 2025 earnings, and there's a lot to unpack, from their revenue performance to their strategic initiatives in asset management.
Revenue and profitability overview. Let's start with the top line. Cohen Steers reported a revenue of $134.5 million for Q1 2025, which is a 3.8% decrease compared to the previous quarter. John, what are the key factors behind this decline?
The decrease in revenue is primarily due to lower average assets under management and 2 fewer days in the quarter. However, it's worth noting that the company managed to improve its fee rates due to a favorable product mix. Despite the revenue dip, the adjusted EPS came in at 75 cents, reflecting a slight decrease from the previous quarter, but still showing resilience in their profitability.
And how about their operating margin?
The operating margin, as adjusted, was 34.7%, slightly down from 35.5% in the previous quarter. This indicates that while there were some pressures on revenue, Cohen Steers maintained a strong focus on cost management and operational efficiency.
Assets under management and inflows. Moving on to assets under management, Cohen Steers reported an ending AUM of $87.6 billion, a 2.1% increase from the previous quarter. What drove this growth, John?
The growth in AUM was driven by net inflows of $222 million and market appreciation of $2.1 billion. This was partially offset by distributions of $600 million. The net inflows were particularly strong in their open-end funds, with significant contributions from U.S. real estate and global listed infrastructure.
It seems like their investment strategies are paying off. How does this position them for the future?
Absolutely. The positive net inflows and market appreciation suggest that Cohen Steers is well positioned to capitalize on market opportunities, especially in real estate and infrastructure, which are key areas of focus for them.
Expense management and non-operating income. Let's talk about expenses. Cohen Steers reported total expenses of $89.3 million, a slight decrease from the previous quarter. What are the main components here?
The decrease in expenses was mainly due to a reduction in employee compensation and benefits, which fell by 3.5% in line with the revenue decline. However, general and administrative expenses increased by 8.8%, primarily due to non-recurring expenses related to company-sponsored funds.
And how did their non-operating income perform?
Non-operating income was $7.8 million, up from $6.4 million in the previous quarter. This was driven by gains from investments and interest income, although there was a slight foreign currency loss. Overall, their non-operating income provided a nice boost to their bottom line.
Future outlook and strategic initiatives. Looking ahead, what can we expect from Cohen Steers in terms of strategic initiatives and market positioning?
Cohen Steers is focusing on expanding their presence in real assets and alternative income, particularly in infrastructure and real estate. They are leveraging their expertise to capture growth opportunities in these sectors. The leadership remains confident in their ability to navigate market challenges and deliver value to shareholders.
It sounds like they have a solid plan in place. Any final thoughts on their future prospects?
With their strong market position and strategic focus, Cohen Steers is well equipped to continue growing their assets under management and enhancing profitability. Investors should keep an eye on their performance in the coming quarters.
Key takeaways. In summary, Cohen Steers delivered a solid performance in Q1 2025, with a focus on strategic growth and operational efficiency. Despite a slight dip in revenue, they maintain strong profitability and increase their assets under management. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Cohen Steers' performance.
Thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial insights. We'd love to hear your thoughts on Cohen & Steers' performance in the comments below. Until next time,